Hope you enjoyed the first session. Let's carry with our second panel discussions called Banking Innovation, Yesterday and Tomorrow. The panelists are Evren Sahin from Yapı Kredi and Nigel Verdon from Railsbank and Gavin Littlejohn from FDATA Global.
Hello everyone. Today we are with you in Istanbul Fintech Week with a panel of banking innovation yesterday and tomorrow. I'll be joining with you, Evren Sahin, responsible for digital banking at Yapı Kredi, and we have Nigel and Gavin with us. Nigel and Gavin, can you please introduce yourself quickly?
Sure. Pleased to meet you. I'm Nigel Verdon, CEO and co-founder of Railsbank.
I'm Gavin Littlejohn. I chair the Financial Data and Technology Association that campaigns on open banking and open finance issues across the globe.
Yeah, great. Thank you very much. So banking innovation is really critical than ever due to changing customer behavior, regulations, and advance of the technology. So this distraction, innovation of banking has been brought to one level up, and recently with the pandemic of COVID, it is even more important. So what do you think about the near future of banking innovation with all these changing factors in technology, regulations, customer behavior, plus addition of a new normal in our life? Nigel, we can start with you if you want.
Sure. I think one of the things that COVID has highlighted within the banking industry or the financial services industry in general is the billions of dollars that have been spent on digital transformation haven't really transformed the financial services industry into a digital business. It's still very much analog processes, analog product that is wrapped within technology. So I think in the near term there needs to be, and I think there is, a focus on financial institutions to actually really understand now what digital actually is. And if I draw an analogy in the music industry, the LP and the record was the old analog world. The CD was just a better form factor, even though it was a digital version of it. But it didn't change the industry until the iTunes came out. And I think we've got the near term is banks that really will succeed are those that and financial services companies that take what they've learned in COVID and apply that leap out of the world of the CD into the world of the digital music product like an iTunes. And by doing that, that means they can actually change business models. They've got opportunity to change cost-income ratios and got real opportunities to take a dramatic change in the financial services industry that they haven't realized beforehand when they were just doing digital change. And a couple of areas of that also I'd see in the open banking world is move open banking from being an IT and a compliance issue into being something led by the chief executive of the bank and being a business model transformation issue. And then you'll see real change. And I think that message is starting to appear in certain banks. And I think the ones who used to have a chief digital officer and have moved that into a part of the culture of the bank, so there is no concept of chief digital, will take advantage of that too, because anybody who's got a chief digital officer has not realized it on the board of what digital really is. There needs to be a cultural change in the bank. So Gavin?
Yeah, no, I'd agree with those sentiments, Nigel. I think the very structure of a bank, which is, I guess, in a retail bank, it does three things. It moves money, it saves money, and it lends money. And it's always been traditionally collectivized around a balance sheet with various tiers of capital. Those tiers are pretty inefficient. And just starting to think about the efficiency of doing jobs without orchestrating it through the traditional lens of banking. Jobs can be discrete, jobs can be very efficient, jobs can be orchestrated at a layer of data without necessarily having to collectivize everything through the balance sheet. So I think the channels that the banks are using are digital, but the banking products themselves haven't changed in a very long time. And I think it's time we saw some genuine innovation at the proposition level as opposed to just the channel level.
It's an interesting thing, actually, as you look at, say, UK faster payment or BACS payment or an ACH payment in the US, they're all the same product. And it's just no innovation there whatsoever, even on delivery of it. And so I think, as you quite rightly say, the core products behind behind banking are very much totally undifferentiated. We get a current account from one bank, I get a current account from another. The apps are all pretty much the same, although the heads of whoever's developing the apps and they always say they're all different from other banks. So it's a real challenge, I think, to look at how can a bank, instead of being very product-led, which makes it organize itself, as Gavin said, around the balance sheet and around itself, could you reorganize the bank around the customer? And that would be quite an interesting thing, because if it's organized around the bank, we tend to still think very inward thinking, and it's a privilege to have finance. Whereas if you wrap around yourself around a customer and it's a privilege to have a customer, you get very different behaviors, and you can actually work with different products and different ways of introducing the fundamentals of banking into the parts of people's lives when they need them, rather than where the bank decides they need them. There's a great paper by Frank Rotman of QED Investors. Frank was the CFO of Capital One, and he wrote a super interesting deck on the Copernicus moment of banking. And if you remember, Nicholas Copernicus was the heretic who said, by the way, guys, we all go around the sun. The universe doesn't go around the earth. And was almost burnt at the stake and discommunicated from the church because of that. And I think we've got a similar thing in banking, is those that take the lead and bravery to organize themselves around the customer and forget they've got a balance sheet, if you see what I mean. That can create a very much different type of organization that happens to do banking as opposed to being a bank.
Well, Nigel, I'd like to take on from your touch on open banking. In Turkey, it is also very hot currently, as new regulations are also coming to our market. I would like to ask you if open banking has helped banking innovation so far in Europe, UK. How do you evaluate it? How was it so far? Was it a success for leveraging innovation in banking, or did it fail? What challenges did it have so far? Can you elaborate on open banking a little bit more?
So open banking is still taking baby steps, in my humble opinion. It only does two things: gives access to people's data and allows essentially initiation of a payment. If you look at anybody who wants to build a financial service, it doesn't support people building financial services. You can't issue accounts, you can't issue cards, you can't do a bunch of payments work around with open banking. So I think it's the first baby steps of freeing up the consumer to give their data to some other areas, like from lending. So it has had an impact in some lending areas and some credit and some risk areas for people sharing their data, which is useful. On the payment initiation side, there's meant to be a massive swell towards open banking, helping the merchants side of the world, because it's cheaper than using Visa or MasterCard. I think the elephant in the room there is no insurance around payment initiation. Therefore, a consumer can be defrauded very easily because there is no insurance around it. Within Visa and MasterCard, there is a ton of protections around the consumer, which is why the schemes are paid for it. So the fact that consumer drives everything and the consumer doesn't see the benefit of payments initiation, only the merchant sees it. I think that is one where it needs to be addressed, and perhaps either pan-European or country-specific payment consumer protection funds are put in place to give that protection, so the merchants can benefit and the consumer can benefit from what payment initiation is set out to be. And I'll also just come back to the point I made earlier on, is until open banking is seen to be owned by the CEO and the board and is not viewed as an IT and a compliance project within the bank, I don't think you'll see massive innovation really happening, because regulation-driven stuff is very much seen as something I'm told to do. I think the smart banks have started to figure out what new business models, products, and things can I use and be and leverage my sort of real differentiation as a bank, which is the place of safety, to leverage open banking. I think some of the ones looking at that now have some real advantage. I don't see it around the world at the moment. Anybody's doing anything massively innovative. There's some step change, so it's a baby step change. There's no step change, industry change happening on that.
Yeah, Gavin, what are your thoughts about open banking? Is it really leveraging innovation in banking?
I think it has the potential to. I think just thinking about banks specifically, we have seen gradual incremental change with bank leadership, not across all banks by any means, but some of the banks have really started to grasp the fact that they should deliver as well as they can technically, because they want to be a customer of open banking, not just a provider of it. To Nigel's point about, is it a compliance exercise? No, it's an opportunity. It's an opportunity to see where your customer is when they're not with you, and to facilitate greater customer experiences. I think 2 points I'd like to make. Firstly, other markets across the globe who've come to the open banking or open finance domain recently have been studying the execution in the European Union and have more or less universally decided to adopt the UK model of standards-based orchestration. We're going to see that in Brazil and Canada. We've already seen it evolve in Australia. And I think in all the markets we're talking to, they seem to be beginning to understand that having very well orchestrated standards coupled to enforcement will drive some level of capability into the market, on top of which firms then need to excel and innovate and develop commercial opportunity. But there has to be some minimum standards. The second thing I'd like to just mention is the rate of market entry and flow of venture capital. In the UK, where we've had incrementally, month on month improvement, higher standards, the flow of capital into this domain is extraordinary. There's a whole raft of new propositions coming to the market, and most of those, many of those that are also wishing for an evolution from open banking to open finance. So under PSD2, it's just payment initiation and access to payments data. Open finance should give us access to, as a third-party provider, to information that the customer shares about loans, mortgages, savings, investments, pensions, general insurance, so that the customer could aggregate from multiple providers a really full view of their financial life. And the initiatives across other markets looking at how this has evolved have looked at the scope of PSD2 as being too narrow, and they've almost universally put in place plans to evolve to a much broader open finance or open life solution. We've seen that in Australia with the customer data right. We've seen that in Brazil with LGPD. In India, we've still got the Data Protection Act evolving, coupled to the data aggregators model. So I think everybody's really learning from the mistakes and narrowness of the European approach and evolving away from it.
Yeah. I would like to finish with a last question to you. Actually, there are two questions regarding neobanks and super apps. So neobanks, after the first hype of the fintech and unbundling of banking products, neobanks came up and they're right now rebundling the banking services in a way, in a differentiated way. But we see customer growth, but we don't see much of a profit so far. What do you think about? Is it sustainable? Can they continue banking innovation, customer experience innovation without creating profit? Is it going to be sustainable? And the second question of mine is about super apps. Tech giants, as you know, especially from Asia, they're creating super apps. Do you think banks can go into this picture? Can a bank create a super app and go beyond banking services? Is it something that you expect in a short or mid-term? Gavin, maybe we can start with you.
So on the subject of super apps, for me, that's just a question of intelligently orchestrating data. And in order for you to do that, you have to have access to data. And I think in respect of the way the banking system is evolving, I don't really see I don't really see that there's an opportunity to think about unbundling or rebundling or marketplace models that are not intelligent. And a true marketplace model, if you think about it as being whole of market, inherently does the customer a disservice, because you end up in a market where you're offering competing products to the customer without providing the intelligence layer to help the customer direct. And the problem the customer faces is in a very confusing financial marketplace full of competing products and an inability to compare like products or to understand even, basically what product would be the right one for me. Offering a range of competing propositions without helping the customer to decision seems to me to be counterintuitive. Organize around the customer, orchestrate their data, serve them the most efficient way that you can, and remove friction from their lives. They would be my key things to think about.
As following on from that is, philosophically, the finance world has been exclusive rather than inclusive, because using things like annual percentage rate, APR, and a bunch of other terminology that your grandmother wouldn't be able to understand, for example, has created a complete opaqueness of those products. And then there's opportunity by marketplaces to, as Gavin says, take all that data, figure it out into human terms, and give it back to humans in ways they understand it. So I think the finance world did themselves a disservice by being so focused on themselves, using a language that's focused on themselves rather than human-centric language, which focuses on the customer. And then you'd have a lot better outcomes because your data and everything else represents the customer, not what an APR is. And nobody can actually write a definition of an APR unless you're reasonably intelligent, or figure out how to compare it, because it isn't exactly like for like. In terms of banks and super apps, I really don't like my bank innovating. They did this in 2007, 2008, and then it blew up the world. And there too much innovating in product and things. I like my bank to be safe, to hold my money, and do what they've been doing for centuries, which is safety and things. So I think the issue banks have is there's what things looks like sexy and digital and all that type of thing is actually a distraction from the core issue, which is the cost income ratio needs reducing massively. The customer acquisition cost, or the deposit acquisition, the liability acquisition cost, and the asset, which is a loan acquisition costs, are far too high, and the servicing of basically a loan and a current account are too high. So my challenge would be, how can banks better play in super app ecosystems? For example, if I can see I live in Southeast Asia, so we see Grab, GoCheck, and all the super apps here, and all the stuff coming out is like WeChat and China. So if, for example, the super app said your deposits are on HSBC, I'm much more likely to put my money on that because I know HSBC are a good trusted brand. So I'd like to see banks innovate on how they can show their brand through the super apps, and being able to work better with super apps, A, to lower their cost bases, so the share prices actually go up, B, so they support super apps so I don't take personal risk. And you've seen this in the I think it was Acorns or one of the others in the US just recently, where their deposits all suddenly gone missing. Generally, I can put it in the right place. The super app's happy because it's originating deposits, getting kickbacks for those. It's I've got one place to go for it in the super app world, and it seems to work in this particular market. So I'm in conclusion, I think super apps have a place to play. I'm not sure a bank should be launching them because I don't care whether HSBC gives me tickets or taxi rides and everything else, and he actually knows about taxi rides, are giving them to me. But they can play a lot better role in supporting those ecosystems and unbundling themselves, coming to Gavin's point earlier, and allow themselves to be rebundled. And that is what Fintech's been doing. And by the concept of unbundling, if you go back to a point earlier about the iTunes, Apple unbundles the music industry, and it's been rebundling itself again. So I can still get a tune through Deezer, through Spotify, through iTunes, or whatever. But people have rebuilt the industry, which was on its knees before being unbundled, which the banking industry pretty much is, if you look at it in a sort of clear light of day, and in share prices from what they should be to what they are. Then unbundling and rebundling can be a very good thing for the industry. The telco industry went through this as well. Music industry has been through this. Finance industry, and that's what Railsbank, our raison d'etre, is to unbundle the whole place and rebundle it again in easy ways of doing it, and including the banks in that.
Okay. Gavin, anything you would like to add about neobanks' sustainable innovation?
Did you say neobanks?
Neobanks, yeah.
Yeah. So yeah, I'm not really sure. When I think about neobanks, I think about sustainable innovation. We've seen some interesting things come out of neobanks so far on the digital experience. I'm not so certain we've seen too much by way of innovation at the proposition level yet. And I'm looking forward to seeing a far greater degree of innovation. I mean, if you're a neobank, you've got to have a point of difference. There's got to be something that's going to make you give up your traditional incumbent player and move to something new. And so far, they've been able to do that with some good brand marketing, a promise of a better digital future, and some innovative user experience. I'm looking forward to seeing the next stage, which is real product innovation.
Okay. Okay, we have come to the end of our time. Thank you very much, Nigel and Gavin. It was a fruitful discussion. And have a nice week, and have a nice Istanbul Fintech Week.
Thank you.
Thank you very much. Thank you.